You're like, I know I have to.
Okay. I need somebody to check the
It's
audio.
blank executive.
I got it. Screen, let's see. Okay, we're live.
All right. Well, happy fall, y'all. Peak leaf season, right? Happy birthday. Anyone else? So, talking about the title of this lunch and learn, or whatever you want to call it.
It's working.
Intro to Top Flite. So, as y'all know, I'm with a new company. Not necessarily by choice. My last company. Well, no, there was a choice. I should rephrase that. So, last company told us in mid-September they were selling, and so we had an opportunity to kind of get to know the new company that was buying us, or reach out to another company and survey the field and see what would be the best fit for us. So, after a lot of thought, prayer, deliberation, vetting of other companies, we landed with Top Flite Financial out of Michigan. We're excited about it. It's a small company, similar to what Sierra was, and we like that. We report directly to the owner, CEO of the company. Not a lot of layers of middle management, which means better pricing for our clients. So we found that we're extremely competitive on rate. As important to that, I think, is the wide breadth of products that we can now offer. We were very much limited before. If it wasn't something we could do in-house, we had to broker it. And we'll still be able to broker some, but a lot of now what we're doing is pretty much in-house.
And Tabitha David is newer, so
Okay.
you were with Sierra Pacific, and
Yes.
now he's with Top Flite Home
Okay.
Loans.
Top Flite Home Loans.
Okay,
Yeah,
congratulations.
thank you very much. I put a stack of the cards up there.
Okay.
Karen, you didn't have a microphone when you said that.
I know it. Thank you,
We should redo this.
Yeah,
You guys have a question
we need to
again?
start over. Yeah. Do I need to rephrase the question? So a lot of the same. I mean, our bread and butter is still going to be purchase money. We're a purchase money focused lender. That means buyers who are buying primary residence, rental property, second homes, and that's going to be probably 90% of what we do. But it's pretty cool that now we can do renovation loans, construction, land, IT,
Land?
commercial.
Now you're talking to Callie.
So we actually function as a broker for commercial, so multifamily stuff, any kind of commercial real estate you can imagine. We have up to around 300 lenders to broker to, so we're excited about that too. And a lot of times on the commercial, and I did that for about 7 years, so that's a segment that I'm pretty familiar with. A lot of your commercial clients like working with lenders who don't require them to move their deposit relationship to another bank, so that's something that we'll be able to do without having to require that. So I've already got a couple opportunities just this week on commercial. So
That's good.
yeah. Let's see. A lot of the same stuff too. Bank statement loans, DSCR, fix and flip. We have a subsidiary called Top Flite Capital, which functions as a private money, hard money lender. So investors who want to fix and flip, we can provide that financing. It's not super cheap, but it's also not long term. So if the rate's a little higher, it's not like they're having to pay that rate for 15 or 30 years. So we get up front, we get a couple points. On the back end, a couple points. So the typical type stuff with hard money, private money lenders for investors. So I was just sharing about Top Flite, our new company. So we're doing commercial now, multifamily, things like that too. Yeah, we're doing some private money, hard money lending through Top Flight Capital.
Can I borrow 500 real quick?
Yeah. To the back of the truck.
What kind of rates are y'all getting for
Trying to go easy.
Generally around 11 to
Yeah, I was
13%.
kind of
points in those?
Mhm.
What kind of points you?
I don't have all the details just yet, but I would say probably 2 to 3 points. I would expect, because you're not making money on the interest. It's such a short term, so you got yeah. And generally 65 to 70% loan to value on the private money stuff. Yeah.
Okay.
I just got the phone with the guy though. we can do fix and flips through a company, through a broker relationship where they'll actually do up to 85% for a seasoned investor.
Okay.
And that's going to be in the 10 to 11%. So a lot of different options. Just depends on the client, their profile, and what they're eligible for. Yeah, have someone want to buy a place down at the beach and they want to use it, put money into it and then hold it as a rental. And so we're looking at doing that to where instead of flipping it to sell, we're just going to flip it into a permanent mortgage once she's done doing the rent work. So I think what we're excited about is just having the ability to solve problems. I think that's these days being a lender in this
Not
market
limited.
is yeah, exactly. Not being able to find solutions because it is an interesting market. Not everyone's a buyer right now with 5, 10, 20% down. We have some of those, but people need creative solutions now more than ever. I think to do what they're trying to do. So there's a really cool program. I don't feel confident enough yet to share all the details of it. But we have a unique program called Dream Saver. So these are for your FHA buyers who have the assets and the income to qualify, but maybe they were just out of bankruptcy or they're an I-10 borrower. If they're otherwise FHA eligible, they just have had maybe a credit problem or something that FHA won't allow. The Dream Saver program allows them to get in that house. It's bought for them by a governmental nonprofit agency. They lease it for a few years, and they have the option to buy it. It says their
Is
prison.
that what Habitat for Humanity does?
No.
And say that again.
What is that? What Habitat for Humanity does? That's a hard no.
Because doesn't it have a microphone?
Yeah, right. Does not have a microphone.
I need a mic.
You need a mic. Habitat is funny you say that. They actually were at a Rotary Club yesterday talking. They're a nonprofit that does essentially housing for people with no mortgage. I'm not going to speak too much on that because I'm not an expert on it, but it's.
No, just kind of wild. Like I had a listing that was a former Habitat for Humanity house. I knew it was something like that where they did like some sort of like charity work, but then it's not an old house. It's like less than 10 years old. It's already been sold. So I was kind of wondering how long they have to live in it before they could sell it.
Yeah, that's a good question. I don't know.
Do they have to pay them back if they do sell it?
I don't know. Yeah, I don't know.
Why don't you know these things, Dave?
Well, here's what I do know. They're doing a new neighborhood right down here off John Exon Parkway.
Yeah.
Like 12 houses, all. And the director, she lives in the tree streets, and she was like, "Hey, I want to." She walked around the tree streets trying to get ideas on to make these affordable houses not look like affordable housing. And so she showed some sketches of them. They look pretty good. So that's pretty cool.
So when people come in or call and say, "Do you all do any rent to own?" that will be an option.
That's effectively what it is, like a lease to purchase. I mean, we try first to get them FHA approved if we can. We have that kind of as a lever. Sorry, I only brought like 8 flyers. So just a snapshot of everything that under the sun that we do. This is the Dream Saver flyer itself. So we have groups within our company where they just make a living off this program, especially with the workers and documented or the undocumented residents here. So I'm excited to jump into this, and that might be a topic of maybe our next one, just to really dive deeper into. Y'all want to just crypto qualification,
I got a couple of dollars in my
Rent
Bitcoin.
a commercial property for somebody who is not a citizen, or they have like maybe their work visa, but they're Canadian, and they want to buy like investment property.
So
Kind of rephrase.
Matt's
that.
question is a non-permanent resident who's going to buy investment property. That's tough.
I think it was tough, maybe permanent resident, I think something happened.
Yeah, it's one of those things where every once in a while we'll run into that situation, and I don't run into it enough to remember how the last one turned out. But I think we have challenges around that especially if it's a investment property.
Yeah. I think it's
But if they're a permanent resident and they're buying to live in, yeah, I've no problem.
worked that out before, but yeah, somebody asked about that, I was like.
Yeah, investment. Yeah, I don't know. I can. You have someone right now trying to buy.
I had somebody just mention it, they were looking at one of my listings and their agent was asking, I was like, said if it was a permanent residence, 16 units, that's tricky, they're not
Okay.
here, you know.
Okay. We're about to roll out a bridge loan product too. So bridging the equity in their current home and in the new home to make the deal happen when the other home sells, so they have to pay off or pay down the new one, convert it to a traditional mortgage. Generally, that's like a 12-month interest only payment. And if it needs to be renewed, it can be. But it's been a while since I've done a bridging loan. That's usually a bank product and insurance product. Something else. Yeah, so just trying to think of all the solutions that a buyer or property owner could need in this environment. It's just a interesting time right now.
It is.
Stuff doesn't seem to be moving as fast, fast at all.
Yeah.
I'm sitting on listings that haven't had showing, not even a showing.
Yeah, same.
Yeah.
That's
And it's
what I'm
like-
selling. Matt, yeah.
It's
All right,
like,
keep
it's-
having
they're
showings.
not overpriced by like, and they might be a little bit, but
Yeah.
not enough to where it's not like rendering showing.
100%.
Something's up.
There's a whole
I'm like, I
neighborhood,
don't,
yeah.
and it just happened like out of nowhere. But
I had a neighborhood open house of 5 houses, and like we marketed it pretty well, and
I
like,
saw
remember
it.
that.
I saw it.
no showings, anybody. There was
Crazy.
no one that stopped by.
I have, I've been under contract since June on a property on a resale contingency.
Same.
Because Arizona, I mean, it's just everywhere.
Yeah.
It's not just here, it's everywhere.
Right.
We finally got an offer yesterday.
Yeah.
What was that, October 21st?
Yeah.
July.
So I'm interested to hear y'all's thoughts on like what you're hearing with buyer hesitancy. But is the rate the Federal Reserve is forecasted a couple of rate cuts maybe.
Mm-hmm.
Do you think buyers on the sidelines are thinking, oh, wait till that happens?
100%.
Yeah.
I'll be honest, I've heard, and this is anecdotal because it's only one person, but it's also, well, I guess it's one person I've heard face to face, but I've also kind of heard the sentiment online. It's more of, there's a fear that the market's going to tank, and people are, like sellers are kind of like, they're realizing that the top of the market is hit, they're starting to see it fall, so they're like, let's get out of this while we can, make the most we can, and then try to catch up on the market whenever it does kind of decline.
Mm-hmm.
That's some of what I'm hearing from people that are kind of, they bought 3 or 4 homes that
Right.
know the market, so it's like.
I think there's a mixture of a lot of different things, like interest rates, and I think sellers that have the 2.5 or 3%, like they want to move, don't necessarily have to, but then they're like, go and like get it pre-approved, but then they're like, well, like they're just waiting for like the perfect home to come on the market. It has to be the perfect price, perfect everything
Yeah.
before they make a move.
Right.
And then that's where a whole lot of home sale contingencies come into place too. Like I've had buyers that we've made offers like with home sale contingencies, and like sellers just aren't doing it anymore.
No.
Like, because it's taking so long to get under contract, to get a showings, etc. But then I also have buyers like we'll go and look at houses that have been on for 2 months, haven't had a price reduction, and then they get multiple offers as soon as we send an offering.
Mm-hmm.
So it's just like this is
So
messed
weird.
up.
Yeah, and I guess the biggest conversation I have is like, okay, well you could wait, but what if that doesn't happen?
Yeah.
And what if everyone waits? Because then you're actually gonna have to pay more in your purchase
Yeah.
price, more money down to even secure the property. versus just doing that now? Like, would you be willing to just pay that $5, whatever it is, whatever it is right now for 6 months, and then you can refinance, but you can't ever come back from that purchase price. So if you're paying $30,000 more in a 30-year mortgage versus I can save you 10 grand right now with the credit and get you in, and then that's not even gonna touch what you're paying in interest if you can refinance in 6 months.
Yeah.
So does that sound like something you'd rather do, or you just want to wait and just see what happens?
And there's so much more negotiation power right now. Like sellers, like there's lots of price reductions. Like on average, I think a home that gets listed, it's selling for like $20,000 than what it was actually listed for.
For sure.
Because it's taking so much time, and sellers are like, yeah, let's just do it. They're hesitant at first. They're like, no, I'm selling as is. No, we're getting this price, and then it takes 3 months.
Right.
And they're like, I'm done. Let's go.
Right.
I give them that expectation up front too.
Yeah.
Like, hey, you're probably gonna pay 10 grand in sellers concessions with this price, so we're gonna put it here. Maybe put it like 3 or 4 grand over, because then that will kind of lighten that load. But this is what you should expect, like to actually net on this purchase for your sale. Like that's what you should expect to net, because that's what's gonna happen. And then I don't have to have the conversation again. Like, look at all these offers. They asked for 8 grand. Like the conversation we had, like, that's ridiculous. I'm like, that's what I told you.
I love when I'm right.
Yeah. I think people still feel like it's 2021 or 2022 maybe, or 2023.
Oh yeah.
And they saw what their neighbor sold their house for, and
Well, looking at the interest that you pay, like my husband and I have been looking into it because we're having a baby now, and like my brother-in-law lived with us. I love a 4th bedroom or like a basement, and we're looking into it, and like interest on a home of like $450, you're paying more in interest over a time for 30 years, like $500,000 in interest.
yeah,
It's like ridiculous.
yeah, I wouldn't look at that. I mean, really.
Well, I don't care. My husband does.
I have that conversation a lot with clients, and I tell them that don't look at the total interest paid, because no one ever keeps a mortgage for 30 years.
I know. That's what I said. He's like, this is a forever home. No, it's not.
Yeah. Average life of a mortgage is probably longer now than it used to be, because people are holding on to those 3% mortgages. People, so which is probably part of the issue we were having right now.
It is.
Average life, even still, you're probably not more than 8 to 10 years, maybe. I mean,
Yeah.
people sell or refi or get divorced or whatever. I mean, life happens. So don't look at that.
Yeah. Crazy times.
And that's the conversation
I speak
too.
to lenders too, and they're like, yeah, we're closing a lot. Things have picked up for us.
Yeah.
So I think it just depends.
It comes in waves. I mean, even this week for us, I think we had a couple fall breaks.
Yeah.
The city was 2 weeks ago. County and Providence, and some schools were
And
last
Washington
week.
County had like 2 weeks almost.
Oh, really?
Yeah, they had
We did,
Friday
yeah.
off, and they had a whole week, and then they had Monday, Tuesday, Wednesday off.
For fall break?
Yeah,
we did.
On Monday, Tuesday, Wednesday.
It was like 3rd through the 16th. I was like, hell yeah.
Yeah, sucks for parents
I
if they
bet the
take
kids
off
love
work.
that.
Yeah.
Yeah. Somebody said that could be people traveling. I mean, I saw a lot of people at the beach. And then this week, I feel like for us, it's picked up. So,
Yeah. Yeah.
but, I don't know. Interesting.
Welcome to real estate.
Yeah. Yeah. So that's pretty much all I really had prepared to discuss.
Can I ask a question, David?
Yes.
What do you consider non-traditional credit, and what kinds of situations have you seen with the non-US citizens that are residents that you've been able to help?
Well, residents.
Well, what, rephrase this.
Yeah, sorry. So let me see. Which one is that?
So I'm just curious of what you consider the non-traditional credit, and then the
Oh, yeah.
mortgages for not, like, do you have any
Yeah.
stories of anybody you helped, any kind of
Yeah.
situation that you could help say, well, like a practical time you've done that?
Yeah, you're referring to the I-10 one right there for residents? Or? Yeah.
Do you have an example or a story?
So the I-10s and that's a new one for us. Up until now, we
Okay.
haven't really had
Okay.
that kind of resource. So I'm excited to jump into that.
Okay. Yeah. So I'm just
Um,
curious about like if giving some kind
But
of.
if you're a permanent resident alien, you can qualify for a mortgage. Now, if you're non-permanent, you know, FHA and the government loans just this past June, I think it was, or May. If you had to have FHA case number or a CABRS number for you, it's generated by like May the 23rd, or else after that you couldn't. If you were non-permanent, you would therefore not be eligible. So there's been some changes there, but we've done some lately for permanent residents. Non-traditional credit references, but again, that's something that's new to us as well. We're out at Sierra, we had to have at least one credit score. You know, but if we could use non-traditional credit references, that could look like, you know, utility bills. It could look like history of rent. So like a verification of rent where we get maybe 12 to 24 months of canceled rent checks, or their landlord filling out a form just stating that rent was paid on time. It could be cell phone history, payment history, things like that that are not traditionally reported to the credit bureau.
Right.
There's a lot of changes going on in credit.
That's wonderful though for.
Yeah.
Okay.
Yeah. So, where was that going? So easily distracted. Anyway.
Do you have any like stories to share about anybody that, you know, maybe you helped that was like didn't look so positive at first, but at the end it kind of came out positive?
Yeah, so I'm just thinking of the loans we recently closed. We closed one earlier this month for a couple out of North Carolina wanted to buy a house they ultimately wanted to retire to here. And they own like an auto repair shop in the Charlotte area. And their business doesn't show a lot of profit. They write a lot off. And so we ended up doing the loan as a DSCR loan, where the debt service coverage ratio. So even though they plan to live in it, ultimately we did it as if it was an investment property. They had to have 20 to 25% down. I can't remember which. Certain programs require 25, some 20, but I think it was 25 because they were first-time investors. So first-time investors, we were able to use the market value rent that the appraiser came up with for the property, even though it was vacant. So we treat it as a rental property, use a market value rent. I think the appraiser assigned $1,800 a month, and as long as it was at least a 1-to-1 coverage, so rent covering payment, PITI, taxes, insurance, principal, interest, then we were fine. Some programs even allow us to go to 0.75%, so you can have negative cash flow on an investment property and still get financing. And that program didn't even look at their tax returns, didn't even look at their W-2s or income. It was all based on that property substantiating the loan. So what are the big hurdles there for most people? Down payment. You gotta have money. And then two, you gotta have a qualifying credit score. Usually DSCR loans are gonna be a little higher than like FHA or, so 660, 640, 660 plus. And they had 700s, that was a problem. So it's just a good fit for them. Had another one where, I may have talked about this one before, but I had a lady who has a real property in Bluff City, and she only earns Social Security income. That's her only income, so DTI just wasn't gonna work. She wanted to do a cash out refi to remodel the place, pay off some credit cards she used to renovate it. And we were able to do a DSCR loan where we just looked at the expected rents. It supported the loan. So she did like this 80% cash out refi, paid off. She was able to save tons of money.
I bet.
She had a bunch of credit card debt. So that's a program that really a few years ago you didn't really hear about.
Are you licensed all over the country so you can help anybody in any state?
5 states for me. So
5 states for you.
The Carolinas, Tennessee, Virginia, and Florida.
Okay.
Yep. And then if I'm not, we have partners who we can hand it off to, and they can do it. And then certain kind of loans you don't have to be licensed. Like the commercial side, we can do stuff all over. see what else. Some stories of interesting deals. You know, we're doing THDA. We're now, you know, we can now do that with a conventional loan. So the cool thing about that is THDA traditionally has a 45% debt to income ratio cap. If you can take a conventional, that actually can go up to 50%. So a little more wiggle room for people who need that. And it doesn't mean they can't afford it. It just means what we can document might only be 50%. So then we have other income we just can't count. So we're doing a couple of those right now. Freddie Mac, it's through the conventional THDA is through Freddie Mac, which means a 3% down payment. But that's covered by the down payment assistance from the state of Tennessee. So it's either $6,000 with no payment, or up to 5% of the loan of the purchase price with the 30-year repayment. And either way, they got to pay it back if they sell or refinance.
Right.
So no free lunch. It's not a grant. It's a lien. It's either second mortgage or a lien. So working with the USDA client right now. Now manufactured, if you have a THDA buyer wanted to buy a double wide, we can't do Freddie. It's got to be FHA, which means structural engineer, all that fun stuff.
You guys are required now, right?
For FHA, they are.
Well, apparently there's a lot more required on an FHA.
A lot more on a double wide.
Yeah, a single wide too.
Well, singles that's a different animal.
Oh my god.
Yeah.
Well, I've never had it happen when I had a structural engineer report that already passed it, and then the appraiser did not.
Structural should trump the appraiser.
Well, that's what we thought, but I had to pay
did they get a copy of it?
$1,800. So.
Oh, really?
Because
I would
the
sit down
seller, the
with-
seller would not pay for it, and that was the only way we got it done. We split it down the middle,
Oh, jeez.
me and the other agent,
1,800 for the structural.
For another?
for 2x4s to be put in the
Oh,
frame
for the work to
underneath.
be done, yeah. And the appraiser required that, not the engineer.
Correct.
It's a joke.
Oh, yeah. He was like, "This is always required." I was like,
Who's the appraiser? Do you know?
Don't say
I
that.
I will tell you after.
They don't hear it.
Well, and like, it wasn't on the subject to. The subject to was wrong. It was for another appraiser. And then they called me and he's like, "Well, I haven't put it on there yet. I was going to come back 3 weeks later and tell you that it needed to be done." I was like, "Am I on candid camera or what's happening right now? Like, what do you mean?" And we just couldn't get past it. We were like, "Structural engineer report? No? Okay." It was good times.
Yeah, it's terrible.
Yeah, I don't think I'll even get paid off of this deal at this point because of that.
Yeah, I love it when you start. It gets to the point where you're working for free.
Mhm.
We know those two sometimes.
Oh yeah, absolutely.
Just to get it done.
About 10 grand this year, I think, compensation. But
Who's
had to get it
Can you
done.
write that off?
Who's counting?
Huh?
Can you write that off?
Probably not. But you have to get it done. Like there's just, and you're working with so many agents that just don't seem to be a solution at all.
Mm-hmm.
So it's like, I guess I'll do it, you know?
Not willing to,
They just don't know.
Yeah.
Like I mean, on that one, how else would we have done that one with Kathy?
Right.
Like there
Yeah.
was no other way to do it that day. I'm like, well, let's just do it this way.
Right. Yeah. Yeah, it takes some creativity sometimes.
Yeah, that was.
Yeah.
We got that done.
That was fantastic.
If you hadn't been there and it was another lender, we would not have. No one would have
Well,
closed.
thank you, Kelly. Say that a little louder for you. If David wasn't there, it wouldn't have happened. It was a team effort.
That was wild.
We
That was
can all
wild.
vouch that somebody in the audience said that about you.
Yeah, all right. One thing I thought of too is different from where we can do pre-quals with and run through the automated underwriting system through Fannie and Freddie and Ginnie with just a soft credit pool. So our soft credit checks before only yielded 2 credit reports of the 3.
Okay.
Now our pre-qual yields all 3, and we can run it through automated underwriting just for that assurity of. So on a pre-approval, when we do an application, to really know that we've got an eligible loan that's sellable to Fannie or Freddie or Ginnie Mae, we have to run it through their automated system, automated underwriting system. Fannie Mae, it's called Desktop Underwriter. Freddie Mac is called Loan Prospector Advisor or something like that, LPA. And that gives us the confidence that based on what we put into the system, assuming we can substantiate it with income documentation, asset documentation, verifying all those things, then we have an eligible loan to those agencies. So we can now do that with just a soft credit check, which is huge because anytime you do a hard inquiry, one, people don't like it, regardless of what they really know about what that is their credit. And two, they get bombarded with what's called trigger lead calls.
Phone calls, yeah.
Which those, thanks to recent legislation, should stop effective March. Passed the Senate a month or two ago, so. But we'll see. Lenders are creative. They'll find a way. Rocket Mortgage, I'm sure, will find a way to harass our clients. Yeah, right. So that's kind of cool. So we'll do the soft pull to get them pre-qualified, and then once we're in the process under contract, then we'll do the hard inquiry because we have to have that eventually. And credit reports are so stinking expensive. It's ridiculous. So if you have a client looking at their settlement statement, they're like, credit report's $250. What's that? It's like, well, we're not padding that number. That's what it is. Yeah.
You're the one that wanted to buy a house. Like, you gotta pay it.
Yeah. I think hitting a button and getting a credit report wouldn't be that bad, but
They gotta make money everywhere.
along the way.
Everywhere.
The credit vendors gotta make it, the experience gotta make it, yeah.
100%.
100%. Hopefully
100.
Hopefully 100 is not your credit score. Temporary buy downs. I think temporary buy downs, are y'all still hearing about that much from lenders or other agents?
A little bit, not as hot as when we were like in the 7s.
You know,
Yeah.
we were talking about this the other day. I think that we did a few in the last 2 or 3 years. I mean, in hindsight, I kind of feel like maybe that money should have been used to do a permanent buy down of the rate, to buy more discount points, because a lot of those buyers who bought 2 or 3 years ago with that 2-1 buy down thought by now we'd have better rates.
Yeah.
You know? Like we'd be in the 5s or something, and that just hasn't really happened unless they get down like a 15 or 20 year.
Can you explain a temporary buy?
So
what it is?
a temporary buy down is
Buy
here's-
down?
temporary buy down is where the interest rate is being bought down for a temporary period. Usually in a top flight we can do a 3-2-1, a 2-1, or a 1-0, which just means that you have a 3% better rate the first year than what the note rate would be, or what the note rate is. A 2% better rate the second, 1% better the third, and then it reverts to the note rate.
I remember that now.
But the cost of that buy down is essentially what the interest difference is, the principal and interest payment difference is for that period. And so for a $300,000 loan, that buy down cost might be 8 or 10 grand. So it only makes sense really for the seller to pay for it. And so we encourage people to try to negotiate that. If you get a seller credit, that seller credit can be used to pay for that. But if you use that for the buy down, you can't use it to offset your other closing costs. So some buyers need to have that cash on hand for either the closing costs, and the down payment. But it's a terrific way for just again trying to problem solve affordability. How do we get someone's payment down with the hope that rates will come down and they can refi to a better rate when that happens. So I think it's still a good time to be talking to people about it. It might be a way too to talk to listing agents about getting their house to move by offering to buy it. So a 3-2-1 would mean that if the rate was say 6% today, they'd have a 3% rate the first year. That's awfully tempting.
Yeah, it would be tempting.
Just
Yeah, I
don't
feel
get too
like
used
it's a
to it.
little bit better now than when it was in the 7s, because you can get much lower now.
Mm-hmm. Right. Yeah, something starts with a 3 or 4 sounds really, really good. And if they sell or refinance within that buy down period, that money's not lost. It's held in escrow, so it gets applied to the balance.
Yeah.
So
That's good, yeah.
yeah. All right. Well, I could keep on
Thank you so much.
yakking away, or We're
Any more
excited.
questions?
Any other questions?
Ace, got any questions?
Thank y'all for having me. Once again.
It's
Happy birthday.
Questions? You looked at me like,